The trade is bleeding, and you're waiting for a miracle. Here's the solution professionals live by. Hope is removed before the trade is placed, not after it goes wrong. If you build a process that leaves no room for negotiation, hope has nowhere to hide. You already know what hope feels like. Price taps your stop, and your mind starts bargaining. It's just a sweep. The news will flip it. If I give it more room, it'll breathe. That voice doesn't sound reckless. It sounds reasonable. That's why it's dangerous. Hope isn't screaming emotion. Hope is quiet permission to break rules. Professional traders don't eliminate hope by having stronger willpower. They eliminate it by designing systems that make hope useless. You can do the same, but you have to accept the truth. Hope is a behavior, not a personality trait. If you change the behavior around risk, hope disappears. The first step is committing to invalidation, not prediction. Before you enter, you must know exactly what would prove you wrong. Not if it goes down a bit, not if the trend changes. A clear price level, structure break, or condition that invalidates the idea. Professionals don't enter a trade until they can point to that invalidation and say, if this happens, I'm out. That commitment is what kills hope later, because hope survives only when you don't know what wrong looks like. Imagine you take a breakout. You're not entering because it looks bullish. You're entering because you have a defined structure, a base, a break, and a confirmation. Your invalidation is simple. If price closes back into the range and fails to reclaim, the idea is wrong. When that happens, you exit without emotion because the trade is no longer the trade you entered. That's not fear, that's professionalism. If this is already clicking, like the video and subscribe now. You're learning the part of trading people avoid, psychology with rules, not motivation. Share it with a trader who keeps widening stops and calling it patience. The second step is fixed risk as a non-negotiable rule. Professionals decide risk first, always. They don't see how it goes. They don't increase size because the setup looks perfect. They risk a predefined amount per trade. It keeps them emotionally neutral. Because if the loss is too big, hope becomes tempting. When risk is small enough to accept, you don't need hope to survive the discomfort of being wrong. You need to ask yourself a brutal question. If this trade hits stop, will I feel calm or attacked? If you feel attacked, you're risking too much. Professionals size down until the stop feels like information, not a punishment. That's how they stay consistent. They don't trade to feel something, they trade to execute. The third step is hard stops and no stop movement in the losing direction. Hope thrives in flexibility. The moment your stop becomes movable, hope becomes active. Professionals don't drag stops wider. If the stop was wrong, the trade was wrong. They exit and reassess. Widening a stop is not analysis, it's denial disguised as management. Here's the example you've lived. You set a stop at a logical level. Price approaches it, you widen it just a little, then price continues, and now you're trapped in a trade you never planned. Professionals refuse to enter that trap in the first place. They accept the small loss, then look for the next opportunity with a clear mind. That is how they stay alive. The fourth step is using a decision checklist that triggers action before emotions take over. Professionals don't rely on feel, they rely on prompts. You can build this in 5 lines. Is the setup still valid? Is the invalidation level broken? Has volatility shifted beyond expectations? Am I following the plan or defending ego? If I were flat, would I enter this now? If the answers point to exit, you exit immediately. No debate. That last question is the hope killer. If you were flat, would you take this trade right now? If the answer is no, you're only staying because you're already in. That's sunk cost emotion. Professionals don't pay sunk costs twice. Drop a comment with the most honest answer you can give. What do you usually say to yourself right before you widen the stop? Naming the script in your head weakens it. The fifth step is treating every trade as one event in a series, not a personal verdict. Hope becomes powerful when you treat a single trade like it must work. I need this one. I can't be wrong again. This has to pay. Professionals don't talk like that. They understand distribution of outcomes. They know even perfect setups can lose, so they don't plead with the market. They execute and move on. This is where you shift your identity. You stop trying to be right, you start trying to be consistent. Your job isn't to avoid losses, your job is to keep losses small and controlled so winners can matter. When that becomes your identity, hope fades because you no longer need any single trade to save you. The sixth step is having a cooling off rule after violations and after emotional spikes. Professionals know the most dangerous moment is right after a loss you didn't accept cleanly or a win that makes you feel invincible. That's when hope, revenge, and impulse come back. So they step away, not because they're weak, but because they're precise. You can do the same. After any stop you feel tempted to move, you stop trading for a set period. You review, you reset. This prevents one mistake from becoming a spiral. The seventh step is journaling the moment hope appears, not the result. Most traders journal entries and outcomes and miss the real enemy. Professionals document behavior. You write, "I wanted to move the stop at X. I felt urgency when price hit level Y. I started thinking about news." That's how you catch patterns. When you catch patterns, you can design rules to interrupt them. Here's what changes when you apply these steps. Your losses shrink, not because you're predicting better, but because you're exiting faster when wrong. Your confidence stabilizes because you're no longer carrying emotional baggage from oversized losses. Your winners improve because you're not bleeding profits back through hope-driven decisions, and your account stops experiencing those sudden, ugly drawdowns from one trade that just needed time. If you want to trade like a professional, you don't try to feel less hope. You build a process where hope has no function. In trading, emotions don't disappear because you ask nicely. They disappear because you remove the conditions that create them. If this helped you, like the video, subscribe, and share it with someone who keeps confusing hope with patience. And comment "No hope" if you're committing to hard invalidation and fixed risk starting today. The market will always be uncertain. That's normal, but your behavior doesn't have to be. Professionals eliminate hope by replacing it with rules, triggers, and discipline. And when you do that, small losses stay small, big losses stop happening, and trading finally becomes a process you control.